There is a continued inflow of off-exchange funds. Short-term Bitcoin price may still rise. Grayscale eases selling pressure. Fidelity takes over with BlackRock's purchases. Market pressure only increases. Bitcoin returns to the 70,000 mark. It's just the beginning of Bitcoin's surge. It may reach 80,000 US dollar in the short term. BlackRock enters the RWA market. Ondo project becomes a dark horse in the RWA world. Base chain gas fees soar. Was the Cancun upgrade not executed properly? SEC lost the face, now it's using money to make up for it. SEC opens its mouth wide, wants to fine Ripple $2 billion US. Today is March 26, Tuesday. How is the crypto market? I'm Zhu. This is the headline sponsored by Deepcoin. Last night, Bitcoin surged from 67,000 to around 71,000. This is mainly due to two main reasons. First, at the cost price of Bitcoin in the 66,000 to 67,000 range, there has been an accumulation of 800,000 Bitcoins, exceeding the normal accumulation threshold of 700,000, indicating that the market has accepted the 66,000 price to a certain extent and is willing to accept the early profit at that price. Second, affected by the bankruptcy of FTX and related institutions like Genesis, Grayscale's selling pressure has gradually decreased. Fidelity's purchasing power has increased significantly after BlackRock, surging to 262 million yesterday, which is a positive signal. If funds continue to show a net inflow tomorrow, the spot Bitcoin ETF may start its gold hoarding mode again. The weekly trading volume of decentralized exchanges has decreased by 24.5% over the past 7 days. Among the top 10 blockchains by trading volume, Avalanche saw the steepest decline of 45.67%, followed by Polygon at 38.78%. Even Solana, the most popular chain for meme coins, was not spared, dropping 39%. Meanwhile, Base rose by over 70%, driven by its meme coin craze. Starknet increased by 28%. This negative change in on-chain trading volume is mainly due to Bitcoin's pullback last week. Bitcoin's pullback led to a significant outflow of overheated meme funds, which is healthier for the market going forward. In the past 7 days, the total market cap of the stablecoin USDT has increased from 103.5 billion to 104.3 billion, maintaining a sustained net growth trend despite not surpassing the previous growth. The 800 million increase in USDT provides the market with about 12,000 Bitcoins of purchasing power at 67,000 per Bitcoin. Additionally, the total market cap of USDC increased from 31.1 billion to 32.3 billion over the past 7 days, a significant increase of 1.2 billion, providing the market with nearly 18,000 Bitcoins of purchasing power. The substantial net inflow of USDC suggests an increase in off-exchange funds entering the cryptocurrency market from the US, with US investors and institutions continuously increasing stake to buy Bitcoin, which is a bullish signal. Bitcoin, the king of cryptocurrencies that people both love and hate, is doing a roller coaster ride again recently. In a pre-market session, it surged all the way to a high of 71,150, not only breaking through the neckline of the head and shoulders bottom pattern formed over the past 2 weeks, but also bringing a wave of surprise to investors. It's worth noting that the spot Bitcoin ETF had been experiencing net outflows, casting a gloomy cloud over the market. However, the latest data shows that this net outflow storm seems to be gradually subsiding, and Bitcoin seems poised to regain its upward momentum, launching an offensive towards higher targets. The analysis from 10x Research is a die-hard Bitcoin fan, and they have already released a chart showing Bitcoin breaking out of the triangle consolidation range, boldly predicting a short-term target of 83,000 US dollar for Bitcoin.
According to 10x Research, the next target for Bitcoin set at 15,000 points will be determined this week, with a short-term target of $63,000. The sequential target prices given were $77,000 in early April, $99,000 in May, and a long-term target of $125,000. According to the latest data, yesterday saw a net outflow of $350 million from Grayscale's GBTC. However, overall outflows from Bitcoin spot ETFs have slowed down. Additionally, Fidelity's FBTC saw a net inflow as high as $260 million yesterday. This, along with the customary higher inflows from IBIT than GPTC, suggests a potential correction in yesterday's overall data when IBIT's data is factored in.
In other words, market selling pressures is gradually decreasing. Previously, 10-time research had predicted that Bitcoin might pull back to 63,000, but now it seems that was just a small hiccup in the upward trend. There is a temporary setback before continuing higher. According to 10-time research, Bitcoin's long-term target is as high as 125,000. So whether you bought at 63,000 or 70,000, there are gains, right? In any case, Bitcoin's return to the 70,000 mark not only brought surprise to the market, but also raised expectations for future trends. As the net outflows from the spot Bitcoin ETF slowed down, Bitcoin seems to be shaking off the shadows of the past and advancing towards higher targets. In June 2022, US inflation reached 9.1%, prompting the Federal Reserve to aggressively raise interest rates. The global economy slowed significantly, and the cryptocurrency industry also entered its coldest winter. Amidst the turmoil, the real-world asset RWA sector was once again brought into focus by the industry, with Binance personally taking part. Goldman Sachs helped a European investment bank issue a 2-year €100 million digital bond. Engineering giant Siemens also followed suit, issuing a €60 million digital bond on the blockchain for the first time. Leading DeFi protocols like MakerDAO and Aave also intensively laid out plans, as if RWA had become a beacon of innovation and resilience. Recently, BlackRock, which is enjoying the benefits of the spot Bitcoin ETF, has also set its sight on the RWA track, launching its first tokenized asset fund, Build on Ethereum.
The Undo project, launched by the B-Late Buildle Fund, has emerged as a standout in this surge, with its token price skyrocketing by an astounding 120% in just a week, making it a star project in the market. RWA has become the second most popular narrative in this cycle, just behind Solana, meme coin. Many advocate for tokenizing financial and real-world assets as a potential killer app for blockchain breakthroughs and predict that the market size for RWA could reach $10 trillion by 2030. With Belay's investment, the RWA track instantly surged, attracting investors to this new realm of boundless possibilities.
In fact, Ondo's rise is not accidental. It represents the core value of the institutional-grade financial products and services that are at the heart of the RWA industry. RWA, simply put, is a tokenization or NFTization of real-world assets, encompassing almost all assets that can play a critical role in the real world. Your real estate and vehicles, once their ownership is recorded on the blockchain, can be traded, fractioned, or securely held. This concept has deeply resonated with investors, allowing Ondo to gain widespread market recognition in a short time. Of course, there are many other promising projects in the RWA world besides standouts like Ondo, such as Goldfinch, Clearpool, and Nexera Foundation, each playing an indispensable role in the RWA space. However, we must also remain clear-eyed about the risks and challenges that accompany the opportunities in the RWA world. While chasing high returns, investors must also remain vigilant about the market volatility and risks. From the crypto cheerleader to the crypto extinction master, how long can Gary Gensler remain SEC chair? After the Cancun upgrade, base chain gas fees remain high. Is this the fault of meme coins? Recently, after the meme coin speculation frenzy in the Solana ecosystem temporarily cooled down, the market's attention has shifted back to Base, the L2 chain of Coinbase Exchange. Tokens in the Base ecosystem, such as Aerodrome and Swarm markets, have welcomed strong upswings, while meme coins like Brett and Toshi have become market favorites, attracting a large influx of hot money. These meme coins, with their unique charm and community base, have quickly established a foothold in the Base ecosystem. However, the surge in trading volume has also put significant pressure on the Base network.
Base trading volume has significantly increased, with trading volume reaching a new high of $394 million on the 20th, compared to an average of $30 million in February. Currently, it remains high at $224 million, marking a significant growth of over 10 times compared to the previous month. The surge in trading activity has also led to an increase in Base network fees. Data shows that the average Base transaction fee briefly soared to $1.019, surpassing the pre-Denkan upgrade level of less than $0.6, prompting the community to raise questions.
Fundamentally, crypto is not a financial product. It's a technology that can update all kinds of financial products. It can improve settlement times. It can make it cheaper to send money to your family overseas in another country. It can be a new way for artists to get paid. Cryptocurrency, regardless of what you think about it, it's not going anywhere. It can't be uninvented.
This bull market has indeed allowed Coinbase to reap handsome dividends, and Brian's right that crypto technology needs continuous upgrades to meet market demands. However, the significant increase in gas fees has disappointed investors who had originally hoped that the Duncan upgrade would lower transaction costs. Although the Duncan upgrade has successfully reduced the minimum cost of L2 transactions, gas fees remain high under the push of a large number of automated trading bots. In order to ensure their transactions are executed as quickly as possible, these bots have set relatively high gas priority fees, causing the gas fees on the Base network to exceed pre-upgrade levels at one point. For the Base ecosystem, balancing the relationship between trading volume and gas fees to ensure stable network operation and a good user experience will also be an urgent issue to be solved. In every hot topic in cryptocurrencies, the U.S. Securities and Exchange Commission (SEC) has never been absent. The approval of a spot Ether ETF is undoubtedly the main trigger for another bull market. Although the SEC has maintained a cold attitude towards this, the market's expectations for approval in May remain very high. However, analysts believe that SEC lacks involvement in the approval of a spot Ether ETF. So, the probability of approval in May is only 25%. Meanwhile, Craig Sam, the chief legal officer at Grayscale, has always believed that a spot Ether ETF will be approved because many issues commonly faced by spot Ethereum ETFs had already been resolved in the month before the approval of the spot Bitcoin ETF. But I think the key issue hindering ETF approval is still whether Ether is a security or not. If the SEC is not focused on the spot Ether ETF, where has its attention gone? There's only one answer: making fines to generate revenue.
The SEC sued Ripple in 2020, alleging that Ripple had sold digital tokens to raise funds without registering them as securities. In July last year, a judge ruled that XRP sold to retail investors on exchanges did not constitute investment contracts. Recently, the SEC requested the judge to impose a $2 billion fine and penalties against Ripple in this case. In response, Ripple CEO Brad Garlinghouse expressed significant anger, stating that the SEC, led by Gary Gensler, has repeatedly acted unlawfully. Ripple's chief legal officer, Stuart Alderodi, stated that the Ripple will submit a response next month.
I think it would be a shame if we wait 4 or 5 years of litigation to sort out this issue, because the issue ultimately will probably be resolved in the Supreme Court if it needs to be. But I think it would be a shame if that's where we end up. The SEC guidance is not law, it's not rule, it's not regulation.
Ever since the US SEC lost the Ripple in July last year, many crypto institutions that refuse SEC regulation seems to have been galvanized into action. Some crypto companies, represented by Coinbase, have decided to stand firm against the SEC. Gary Gensler's constantly changing stance, from being the crypto cheerleader to the current crypto extinction master, has subjected him to unprecedented criticism. But what's worrying is that the SEC under its leadership seems to have fallen into anxiety and is gradually losing control while facing consecutive blows from the crypto industry. Opening with a $2 billion fine has a taste of using money to make up for losing face. Many people want to push Gensler out and wonder if the SEC lineup will be reshuffled. I think there will be substantive results after next US presidential election. Let's wait and see.
Coinbase International Exchange set a new historical high for daily trading volume in March, with daily average trading volume significantly higher than the previous months. Last Wednesday, the trading volume hit a record high of $6.23 billion. Solana has surpassed Ethereum to become the blockchain with the highest weekly stablecoin transfer volume. Data from the blockchain analytics platform Artemis shows that Solana's stablecoin weekly transfer volume reached $364.7 billion, surpassing Ethereum's network volume of $152.99 billion. The Philippine Securities and Exchange Commission (SEC) revealed on Monday that it is working with the National Telecommunication Commission (NTC) to block user access to Binance. This action is due to the platform operating without the necessary regulatory licenses within its jurisdiction. Blend, an NFT lending platform under Blur, has surpassed a total transaction volume of $5.5 billion, reaching 5,539,191,390 in the current period. The platform has facilitated a total of 610,066 loans, with approximately 3,841 active loans, totaling around 7,231 Ethereum. Russian cryptocurrency exchange CumEx has announced a gradual shutdown of operations. The specific timeline includes the suspension of new user registrations starting from March 25th, 18 o'clock Beijing time, cessation of support for asset transfers from Binance, and halting cryptocurrency and fiat deposits.
We know the amount of assets in our account balance is actually reflected in our daily behavior. Those with less than 100,000 US dollar in their accounts are the ones cursing people everywhere, seeing everyone as idiots. Those with 100,000 to 500,000 rarely speak, focusing intently on studying market trends. Those with 500,000 to 1 million are quite cultured, preferring to share their trading experiences, while those with over 1 million US dollar don't like to talk much, quietly amassing great wealth. So which category you fall into? Okay, that was the main content of today's program. If you find our channel helpful, please share and follow us. You can also become a member by clicking the right. 这一段重新来一下啊。Okay, that was the main content of today's program. If you find our channel helpful, please share and follow us. You can also become a member by clicking the top right corner to see our membership benefits. Our channel focuses on curating valuable news from the crypto, blockchain, and mining industry. From Monday to Friday, we provide news and information, while on Saturday and Sunday, we feature in-depth special reports. You can also access our Monday to Friday analysis industry articles from our featured authors. Let's grow our wealth together slowly. See you tomorrow.